This meeting is being recorded.
Okay, so, let me get everybody's undivided attention, and why don't we like circle up in here and come closer, okay?
You take really notes, definitely take good notes.
Okay. All right, so, everybody should have their e-app up. Go ahead and type in, just like your own name into like, so worksite e-app, start application, type your own name in and get to where you add applications, okay?
Welcome. Not mine. I don't
You mark test mode.
Just like on Diana's screen. Oh.
You're good.
That's yours.
Okay.
I'll go with stuff. I thought it was yours.
Is everybody in the e-app?
This is something David.
They sound good.
Okay.
Go
Go ahead and log in.
Yes, for some.
Clearly not. Clearly I just want to take the day off on Friday.
Morgan, are you in an application?
No.
Who wants to start, right?
Agent tools.
Not agent tools, for worksite e-app,
Okay.
just start application.
Okay.
And then just put your own first and last name. And then go ahead and fill this out, this employee personal information.
Wasn't it up there?
Well, you guys don't really need to see it.
Okay.
I mean, I'm just,
Okay, so what about franchise?
That volume, we want it a little lower.
As long as you're hitting test mode, it doesn't matter.
It's on its own.
Okay, so we're gonna do work site.
Make myself taller, boss.
sure.
Good over there, David?
So,
Guys, you're filling in your own info, hit test mode, it doesn't matter which franchise you use, whatever one you have down there, and then hit trainer is Amanda. Oh, if you're still on that screen, if you didn't.
and then see how you guys in Kansas City, I'm at the applicate where you can add.
What was that?
Get to the sheet where you can add.
Yeah, like
applications.
see how I have like the primaries all in there. And then we're at the app where you can add applications. That's where I want to get everybody at, and then I'm gonna start.
Okay, thank you.
It's the load.
It's okay. Once we're in there and loaded, it'll be good, because what I'm gonna do is go over, there's 3 types of life that you can write site, and I'm going to give you just quick bullet points on who qualifies and some amounts. Then I'm going to get into how to, like when you're sitting down with an employee, how to build value in life insurance so that they want to enroll. And then we're going to break off into pairs. I'm going to have you guys enroll from start all the way through the life. Okay. And that's kind of our goal for today.
So we had insured it. Had insured.
You get the yellow juice.
This meeting is being recorded.
Screen. So there's 3 kinds of life insurance that we can write on the individual or on the worksite side. Okay. Everybody knows our group term to 100. Obviously the paid up at 65. The next one's career life plus. And then we have a modified life. Okay. So just real quick, just some base bullet points. Okay. I'm not going into like all the details of the different life insurances, but obviously the main one that we want to enroll people in is that group term to 100. okay? If you open up this enrollment booklet, go ahead and turn past the needs planner. Go to where it has the benefits bullet pointed, okay? And on the left-hand side, you'll see group term to 100. Okay. That first bullet point, it'll tell you how much coverage, like the limits, okay? So you can enroll up to 150,000 of insurance of somebody 40 and younger. You can enroll up to 100,000, 41 through 55. And then if they're over 55, we can only enroll 50,000 or less, okay? Okay, so just some quick bullet points, but it's right here in your enrollment booklet. You don't even have to have that memorized, okay? Really quick, you can enroll people in the group term to 100 from age 0 all the way to 69. If they're 70 years old, they do not qualify, okay? So 69 and younger. In the Career Life Plus, which is the other life insurance, you can only enroll up to 50,000 in coverage. Okay. If they're kids, the Career Life Plus, you can only enroll them 0 to 20 years old. Okay. And then Modified Life, you can enroll, which is our ALX Modified Life. You can enroll from age 0 all the way to age 80. Okay, so let's say they're 71 years old. You can still write them life insurance. It's going to be a modified life. Okay. And then one quick bullet point, you know, and I'm just introducing that we're going to do a whole nother workshop on like, you know, where you guys can take the time. I'm just introducing this, just planting the seed of like qualifications for it. But in the modified life, if they're over 70, the most you can write is $5,000. Okay. They're 0 to 18, the most you can write is $15,000. And from 18 to 70, you can write up to 30,000 on that modified life. Because I'm going to talk about modified life a little bit because it's a fantastic policy for people, especially who are uninsurable on the individual side. Okay. So those are the 3 types of life insurance. Some things to think about too, because I've done this before, is the most you can write on a spouse in the state of Missouri and in Illinois is 50,000 in coverage. On the employee, you can go up to 150,000 if they're under 40. You know, you guys get the point. But if it's a spouse, the most you can write on group term, 50,000. But let's say you want to write 100,000 on somebody, on a spouse. Well, you can do 50,000 group term to 100. And you can do 50,000 on Career Life all through payroll deduction. Okay, so just kind of introducing that to you. Okay. Group term to 100 is meant for pretty much everybody that's healthy and that has very minor health issues. So what I want you guys to do is go to click on group term to 100. Go ahead and click it. Hit next. Information in there, put group term to 100. The state really doesn't matter, just put Missouri. Put in whatever face amount. I just put in 20,000 on mine. Go ahead and put in a beneficiary. Okay. And down at the bottom, you'll see 125 amount. That's the first 50,000 is pre-tax. So let's say they already have 50,000 and you're writing another 50,000, then this 50,000 would you keep at 0. But if it's the first 50,000, then you put 50,000 in there. Okay. Then hit next, and I want you to go to the questions. Okay. And this is just, I really want to emphasize when you guys are new to enrolling and you enroll somebody in group term to 100, it's very important that you read these questions to the applicant. Okay. Because I know when you're out with Derek or myself or like we have years and years and years of Tommy experience in enrolling. Okay. So like we ask certain questions to know if somebody qualifies for the group term to 100. The point being, I don't want you to accidentally enroll somebody in a policy that's either going to get declined or moved to a modified. you got to get used to these questions. Okay, so just take the time to read them. Because again, group term to 100 is meant for pretty much everybody that's healthy and that has very minor health issues. Like high blood pressure is okay, but it has to be under 140/90 for them to qualify their last blood pressure reading. If they're over that, then they shouldn't get the group term to 100. Okay, but you have to get yourself comfortable with the question. So I really want to emphasize, like when you guys are new enrolling, when you're at an enrollment, take the time to ask these questions. So that way you're not accidentally enrolling somebody in something they can't qualify for. Same thing goes, I know Diana did the workshop on like the critical illness, cancer, all of those things. Take the time, like the first time you sell a cancer policy, ask the cancer questions. The first time, you know, until you get used to it, the critical illness, so you can tell who qualifies and who don't, okay? Because it's real easy to sell somebody a critical illness policy when they just had a heart attack, but you're not supposed to enroll somebody in that.
Also,
Okay.
people will forget when you ask them if they have chronic health conditions or take any medication. I had someone with COPD, remember halfway through as I'm asking the questions.
Oh yeah, I have COPD, yes.
Yeah, that sounds familiar.
Yeah, so just run through the questions, make sure you're comfortable until you know who qualifies. It's very, because you guys are licensed agents and it's important that you are qualifying them. We're underwriters in the field and that's our job, okay? So that's where you get the questions is on the e-app, okay? So Career Life Plus, okay? Mainly you just want to write Career Life Plus if you're enrolling somebody, like I said, that example of a spouse, you've already wrote them 50,000 group term, but they want more coverage. Well, you don't have to tell them, oh no, sorry, you're maxed out on the life insurance, because that's not really true. You can write them up to 50,000 on Career Life Plus in addition to that, okay? But also a big one with the Career Life Plus is for kids 0 to 20, but keep in mind, you can't write somebody Career Life Plus if they're 21. Okay, you can, if it's a child, that's 21, but you'd have to do group term to 100 and they have to be a full-time student. Okay. But I don't want to get into, I'm just kind of introducing some quick bullet points on that, but, we're going to go into how to build value with the life insurance. Okay. So everybody turn to this page. And I guess the biggest thing I would like you guys to get out of this, as far as building value in life insurance, is how you sell life insurance is two key things. So you got to write this down. Okay. Yes, our life, so let me back up. Yes, the way the group term to 100 work, the features of it are fantastic, right? It covers them to age 100. It's portable. It's pre-tax, first 50,000, right? All those things, like the features of that is all good, but that's not what sells it. Does that add value to it? Yeah, absolutely. But what gets people to want to enroll in life insurance is what it's going to do for their family. Okay, so write that down. Okay, how you build value in life insurance is like what it's going to do for the family. And I'm going to give you, so if you want to make some space, because I'm going to give you some examples of how to build value. And really, if it's not just life insurance, if it's the cancer plan, like why would somebody need it? Like what's the why behind it? Right? Same thing with life insurance. Okay, why would somebody need life insurance? Okay, we're going to start thinking about those things. Okay, so that's the first thing. The second component you have to have in order to, become kind of really good at enrolling somebody in life insurance is creating that sense of urgency. Because why should they do it today, right? Why not wait till next year or the year after, or wait till you're married, or wait till you have a kid, or wait till you buy a house, or wait till this or that or whatever, right? How you get away from that is you got to create that sense of urgency. So why do they need life insurance? And create that sense of urgency, okay? And really, if you think that when you're enrolling of like any policy that you're going over with an employee is like, why would they specifically need it? So I want you to write this down, paint the picture for them. Okay, and this doesn't have to be a half an hour, right? You're meeting with an employee, it should only take 10, 15 minutes, but just have a little bit of a conversation, okay? So I want this to be a little bit interactive. Why would somebody need life insurance?
Yeah, those.
Pay off bills, okay.
Pay off mortgage.
Pay off mortgage, that's a good one.
Income replacements.
That's a good one. Income replacement, okay.
They might want to send a fees to college for some education if they're not gonna contribute to it.
College education for kids,
Build generational wealth.
build generational wealth, and then I heard funeral and final expenses. So all those are right answers, okay? All of those are right. So when you're sitting down with somebody and they already have life insurance, maybe they already have enough life insurance to pay off the mortgage. But in addition to that, do they have enough for funeral and final expenses? Do they have enough for income replacement? Do they have enough to pay off their? So think about that when you're meeting with them. So just because like, oh, do you already have permanent life insurance? Well, yes, I already do. Okay, how much coverage do you have? 100,000, whole life, builds cash value. Oh, okay, well, you're set with life insurance. Let me go over these living benefits. Well, not necessarily. Think about all the things you need life insurance for, right? My question would be like, okay, well, how, like, how much is your house worth? If it's worth 300,000, but you only have $100,000, that's not even to pay off your house, right? So we have to start thinking differently about that. But let me back up because I want to organize this. Okay, so those are all the reasons why you need life insurance, but let's keep it in an order, like an orderly fashion. So the first thing, when somebody passes away, what's the first thing families have to deal with? Funeral and final expenses. So write that down. Okay. And I will be honest with you, I will say probably 90% of the group life to 100 or any life insurance that I write, I base off of having enough money for funeral and final expenses. That's going to be your bread and butter, which we're going to really talk about. Okay. So funeral and final expenses, that's the first thing. Okay. What's the second thing families are going to need? If we put this in order of all the things that we said,
Income replacement.
income replacement. Okay. And what I want to get you guys to start thinking about is like anybody you sit down with that has a spouse, especially if they both work, right? How does that, and write this down. How does that surviving spouse continue to pay all the bills with half the money coming in? And you can say these things to who you're sitting down with. When you ask that question, like, how does your surviving spouse continue to pay all the bills with half the money coming in? I would recommend income replacement, right? By you asking that question, it's going to paint the picture of like, they might not have ever thought like, oh God, yeah, if I go get hit by a semi tomorrow and get in a car accident, like we definitely use up all my income and all my wife's income to pay all of our bills every single month and maybe put a little bit away. But like, if I'm gone and there goes $2,000, $3,000, $4,000, $5,000 a month gone, like instantly, as soon as they pass away, their income does not continue. It's like the last paycheck's that last paycheck. You got to kind of paint that picture, and you're not putting pressure on somebody. You're just having a conversation of what the reality of it is, right? So that's income replacement. Okay. What's the third thing?
Mortgage protection, paying off the house.
Yeah. Making sure you have enough to pay off your house. And then I would say after that would be the, if you have kids, making sure you have enough there to pay for college education. But it's good to talk about these things because when you're sitting down with somebody, especially if you guys are at a re-enrollment and they already have $20,000 of group term to 100, I don't want you guys as new agents to be like, oh, they already have our group term. Well, look at the face amount, then look at their life situation. And keep in mind, you're a licensed advisor, like you guys are licensed by the state. So advise them, like, and how it was said to me when I was new in the industry, from the people who taught me how to enroll and, sell life insurance, was always put yourself in the position of you're sitting across the table from your mother, from your father, from your grandma, from your grandpa, from your sister, your best friend. And how would you advise them? Like if you looked at their life insurance situation, right? Like, and if you're genuinely and your intentions are in that place, like people will know that you're advising them correctly. Like they can see it, right? Versus like you're just trying to hit bonus, or you're just trying to sell life insurance, or you're just trying to make sure you sell everybody in that, like if you take all that out, like the money is going to be a byproduct if your intentions are good and you really are there to try to help people. Because the reality of what we do you have to be passionate about protecting families. Like, it's very serious what we do. Like, you enroll somebody in life insurance, and like, I've been in this industry for 14 years. Like, I've enrolled somebody on a Thursday, come Saturday, that person I enrolled got hit by a drunk driver and was instantly killed, and had a family, a wife and 4 kids. And the only life insurance they had was through us. Like, that's a responsibility of us, right? That's the reality. And like, my team knows this, but I just enrolled somebody in September at open enrollment, and now it's what, April of the following year, and a month ago her husband died in a motorcycle accident. Like, that's the reality of what we do, and like, we're the only life insurance that they have. Okay, the other responsibility, and I just want you guys to get passionate of, like, when you're enrolling, like, take your job seriously, because it's true, you know. But if your intentions are good, again, the money's gonna be a byproduct. You will hit bonus, like, people will enroll because they want to deal with people that they trust, right? So, but keep it in that order. So first, funeral and final expenses, income replacement, mortgage protection, and just keep those things in mind when somebody says, oh, I already have life insurance, or you're looking at a management report and they have 20, you know, those kind of things. Start building upon that, and you're gonna help enroll more in life insurance, which is what they need, right? So let's talk about funeral and final expenses. And I love talking about this because, again, it's 90% of the policies we're gonna write, guys, are gonna be 50,000 and less. Okay, like, that's our bread and butter, is like making sure that everybody we sit down with has enough at least for funeral and final expenses, because it's comfortable, usually keeps that employee within an hour's wage, right? We don't want to oversell, right? Now, can you sell bigger policies? Absolutely, you can build from this, but I just want to build value in at least that funeral and final expense, okay? So when you sit down with somebody, and it doesn't matter, and I like to talk about like young people who are in their early 20s that don't have any dependents. I'm going to start there, okay? Because to be honest, we enroll them at a very, very high percentage. Although, even if the decision maker is like, oh, all my people are really young, they're not thinking about life insurance and all these things, like, they're going to be shocked when we enroll, because the majority of all single people do enroll. Because one, it's super cheap because they're young, right? And once you explain and you paint that picture of like the reality of, like, God forbid something happened to you, who would take care of your funeral? Like, have that conversation with them, which I'm going to talk about here in a second, okay? So you sit down with somebody and they don't have any dependents. What I like to ask them, I like to put it out there. I say, I realize you don't have any dependents, so it's not like you need to leave somebody a bunch of money. But what I would recommend is making sure you have enough for funeral and final expenses. Have you ever dealt with a funeral before? Write that down. Okay. Have you ever dealt with a funeral before? Now, a lot of single people, or whoever you ask that, because I really do ask that to almost everybody. Have you ever dealt with a funeral before? And it's amazing what you hear. You'll be very shocked that so many young people have dealt with funerals, or, you know, but let's just say, even if they say they've never dealt with one, you're getting them in that frame of mind. Remember, what the point of what we're trying to do is, you got to paint the picture for them. Okay, so have you ever dealt with a funeral before? Yes, no, kind of doesn't matter what they say. If they do say yes, and be like, okay, if you don't mind me asking, who was it and how much was their funeral? And just put yourself in a conversation with them, and they'll tell you, well, it was my grandmother, or I helped with my dad's, or I helped with my sister. Isn't that great information if you're sitting down in front and you know that they buried a spouse, or their mother, or their sister, or, you know what I mean? And you're talking to them about, don't you think that's important information by just asking? So ask, have those conversations, and it's kind of amazing what they say. So if you don't mind me asking, who was it and how much was their funeral? Okay. And kind of, again, doesn't matter what they say. The next lead-in thing you want to ask is, well, the average cost of a funeral nowadays is anywhere from $10,000 to $15,000, and that's a lot of money. Okay, so again, I realize you don't have any dependents. And again, I realize, you know, it's not meant to leave somebody a bunch of money, but realistically, if something happened to you, I know you put X, Y, and Z as your beneficiary on that accidental death benefit, more than likely they would probably be the ones to take care of your funeral and final expenses, right? So think of a 22-year-old at one of your machine shops, no dependents. You ask him that question and you say, well, I see you put your mom as your beneficiary on your accidental death benefit. I'm assuming realistically, if God forbid something happened to you, would your mom be the one to take care of the funeral and final expenses? And just listen to that answer. All of a sudden, guess what you're doing for them? They're thinking about, oh crap, yeah, if I passed away, my mom's gonna be having to deal with this. Well, I don't wanna do that, right? The value's there, right? The higher the need, the less concerned they're gonna be with the price, right? So what did we just do? What was that first bullet point I said you have to do? Create the why, right? So why would somebody young, 22 years old, no kids and dependents need life insurance? You just built the value there. So now you go into how it works. Okay, so what your company's done for you is they provided a group term to 100. Okay, and you can kind of go over the bullet points or whatever, however each team like separates how they go over that group term, because it's kind of that builds value in itself. And then boom, you know right away, at the very least, they see value in enrolling in at least 10 to 15,000. But it's okay to also, if you want to add to create more value, is like the average cost today is 10 to 15,000, but that's just today's cost. I mean, you're only 22 years old. When you think 50 years from now, which again, you'll only be 72 years old, the cost of funerals is going to go up. So I would recommend at the very least having 15,000. But you know, if you want to take care of inflation, maybe anywhere from 15 to 50,000. So I'm going to write that down, or I'm going to show you the rate, or whatever, you know, whatever, however you want to go over that. Okay. But you've created value in that funeral and final expense. Okay. Now I will say, anybody, it doesn't matter if they're young, like don't, you know, or they can be married, or anybody that says they don't have any life insurance, that's really how you want to build value in it. Okay, is exactly that way. Okay, same thing. Let's say you're at a re-enrollment and somebody already has $15,000 or $20,000. You know, again, go over that conversation. You know, what's the average cost of a funeral? Have you ever dealt with a funeral? If you don't mind me asking, how much was the funeral? Okay, I see you have 20,000, so that's great. You have enough for funeral and final expenses today. But realistically, you know, when you think 30 years from now, 40 years from now, 50 years, cost of funerals is going to go up. So I would recommend like looking into increasing it. And that's the other thing, is give yourself power of like, this is what I would recommend, or I would advise, you know, to try to give them advice on what they should do with their life insurance. That holds a lot of weight too, building value in it. And then you can kind of go over the options from there. Okay. But that's the first thing, is funeral and final expenses. Don't be shy asking them, like, have you ever dealt with a funeral before? Do you know what the average cost of a funeral is nowadays? Realistically, if something happened to you, I'm sure your wife would be the one to take care of those funeral and final expenses. Or let's say the employee only has 20,000 group term, and you see a gap in the coverage to cover the spouse. Have that conversation, right? You got to kind of think, if this was my mom and I'm sitting down and my mom only had 20,000 on her, but there was nothing on my dad, how would you advise them? Right? It's the same conversation.
Right.
Yeah. Like, this is great. You have 20,000 on you, you know, enough for funeral and final expenses, but God forbid if something happened to your spouse, you know, you would be the one to take care of those funeral and final expenses, right? Have you ever dealt with a funeral recently? Oh, who was it? How much was that? If you don't mind me asking, do you know what the average cost of a funeral is nowadays? You know, can you imagine, like, if something did happen to your spouse, you'd be the one to take care of those funeral arrangements, right? And then another thing that, if you want to write this down, and this is kind of a one-liner, but and it's a question you can ask them, and guess when the funeral director wants his money. That's another good one to say. Guess when the funeral director wants their money? Right away, right? And this helps you with people who, you know, if they're like, they could sell my motorcycle, or they can sell the house, or they can sell, you know, sell all of this. Have that conversation. Like, have you ever dealt with a funeral before? Do you know what the average cost of a funeral is? Do you know when the funeral director wants their money? It's usually by the time somebody passes away, and they have to bury that person, it's, let's say, a week, you know, it's not easy to sell a house, especially with the stress of losing somebody. So I would recommend having at least enough for funeral and final expenses. Like, that's fine if the majority of what you want to give your family is the house and the farm and all these things. That's going to take some time. I would recommend having at least enough there for funeral and final expenses. So that way they have that money right away to take care of that. So they're not burdened with that cost. Have that conversation. And now all of a sudden you built value in it. Okay. So that's the funeral and final expenses. Any questions on that? Anything you want to add? No?
Sorry, I was able to the end.
Oh, it's okay.
I think it's great.
Okay. So that's that. We're going to role play this. I want you guys to like practice these questions. Okay. So let's say they have enough for funeral and final expenses, whether it's with us or another company, and you're sitting down. So now think of the next thing is that income replacement. Okay. Now, everybody that's categorized in this section is, you know, let's say somebody is engaged. Let's say somebody is married. Okay. Let's say single moms, single dads, like all of these things. So, and build them up. You know, that's great that you already have a $20,000 policy. You know, that's great. So wherever they're insured, fantastic. We're in the business of insuring people. Okay. But now we just want them to start painting that picture of like, okay, is it enough? So have that conversation of like, okay, you have enough for funeral and final expenses, but you're married. You know, are you guys a dual income family? If you don't already know that, ask them, you know, are you a dual income family? Because the next thing you want to start thinking of is you have enough for funeral and final expenses, which we know the average cost, blah, 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 blah. But the next thing is, how does your spouse continue to pay all the bills with half the money coming in? Realistically, if something happened to you. You know, and it's kind of a rhetorical question, but you're getting them to think about that. Okay. How does their surviving spouse continue to pay all the bills with half the money coming in? So I always recommend, you know, there's always an adjustment period when there's a death of a breadwinner, and obviously you're one. We recommend, if you know, even if you can just do 3 months of your income, 6 months, a year of your income, it's going to give your spouse a chance to breathe, figure out what they need to do with their life, their job, all of these things. So what the company's done, and then boom, you have value in the income protection. Now you can go over how the group term to 100 works. And then you go over those options. Okay. So that's income replacement. Okay. Mortgage protection. So it sounds like you have enough for funeral and final expenses, income replacement. But the next thing you want to start thinking about is your house. You know, if you don't mind me asking, how much do you have left on paying your house off? And whatever that amount is. So I want you to write this down. What you're doing when you're having these conversations with the people that you're sitting down with, you want to spend their insurance. So start spending their insurance on these things. So that way you're opening up that value of like why they either need more or why they need it in the first place. Okay. So like, let's say they have $100,000 in coverage. They have a $200,000 mortgage, dual income family, and a funeral. Okay, so paint that picture for them. You know, God forbid, realistically, if something happened to you, you have enough for funeral and final expenses. You have enough maybe for 6 months of income replacement, but you know, your biggest bill is your mortgage will still need to be paid. So if you can have enough group coverage that would take care of that mortgage for your spouse, then they don't have that biggest bill, right? So write that down. Okay, your biggest bill is your mortgage will still need to be paid. Okay, and then ask them, okay, how much do you have left on your house? Can you imagine, like, if something happened to you, making sure that that biggest bill is completely paid for, so your spouse, again, you're painting that picture, doesn't have to worry about moving out, you know, changing, you know, to a less desirable area, all of those things. Okay. Okay, so those are those things. So funeral and final expenses, income replacement, mortgage protection. Now I'm going to jump to coverage on the kids. Okay, so Career Life Plus, because this is a big one. And again, for kids, you can only cover them 0 to 20. Okay, and you can only cover them for up to 50,000. Okay. But if you look at the book, the Career Life Plus is whole life insurance. And this is a very, very popular thing. We enroll a lot of people in this policy, or I should say kids. But the other nice thing, keep in mind, this is for kids and grandkids. Okay? So when you're sitting down with somebody, let's say they already have a ton of life insurance, the spouse has a ton of life insurance, don't forget about the kids. So just ask them, you know, do your kids have life insurance? Or let's say somebody's 65 years old, they have tons of life insurance, spouses, tons of life insurance, kids are growing in and out of the house. Like, oh, you have grandkids? How many grandkids do you have? Do you know if your grandkids have any type of life insurance? Those kind of things. Boom, you're opening up that value for this Career Life Plus. Okay. And basically how I go over this one is, since you have kids, I definitely want to make sure you get information on our Career Life Plus benefit because it's funded by Whole Life. Have you ever heard of the Gerber Grow Up Plan? Okay, just ask them that. Have you ever heard of the Gerber Grow Up Plan? They say yes, it helps your case. Even if they say no, most people at least have heard of it. Okay, but it's just kind of a nice lead-in question. Have you ever heard of the Gerber Grow Up Plan? This is very similar, except it's done through payroll deduction, and you can cover your grandkids or you can cover your kids. And the reason it's really popular for parents and grandparents is because it's funded through Whole Life. And what's nice about Whole Life is it covers your kids or grandkids for the rest of their life, but it builds cash value as well. So obviously we never want to perceive something happening to our kids or our grandkids, okay? The advantage of doing it now, and again, that second bullet point, create that sense of urgency. The advantage of doing it now is you're locking in their age, because obviously kids and grandkids will never be younger than they are today. Their rate is very, very low. It's just making sure I'm staying on time. Their rate is very, very low, so you can lock that in, but you kind of forget about it, and over time, it's going to build cash value. And then you can give this to them, and not only will they have that life insurance as an adult, but they'll have that cash value there too, and you can gift it to them. And this is a true story because my mom actually did something very similar for me when I was a child, so I use this example, okay? And when I turned 26, she transferred the ownership to me, and I still have it, and there's life insurance there, but there's cash value there, and mine's just sitting there, okay? But I'm so thankful that they started when I was so young because I could never get that rate today. And my sister used hers to pay for part of her wedding. Like she actually cashed hers out. So it's a nice way. And I wouldn't advise necessarily doing that, but what's nice for your kids is if your kids ever run into, or grandkids, a financial emergency, let's say in their 20s, you kind of forget about this, but they'll have that money there that you could access to help them, or they can, but they're going to be covered in the meantime. Okay, now you can do up to 50,000. I'm going to write down a couple options for you, or however you guys go over the rates. But that helps build value in it. Okay, so that's the Career Life Plus. Okay, but just keep in mind it's only from 0 to 20. Because I've caught myself a couple times with 21-year-olds, okay? Okay, so that's Career Life Plus. Anything you guys want to add to that? Oh, guaranteed insurability. So that's a huge one. Another huge bullet point on this one is it does lock in the kids' insurability in the future. So, and I like to explain this to parents, in the future, if your kids ever, come down with something that would make them uninsurable, you've locked in their guaranteed insurability option. Okay, so there's going to be times where they can double this coverage without proving insurability. And that's an important point on that policy. Okay. Anything you guys want to add? No? Okay, so that's Career Life Plus. The last one I want to go over is the modified life, which is not on here.
Okay.
Okay.
I can find it.
But to be honest, modified life, and it's funny because over the years of doing this, I think a lot of people just don't want to pitch it for whatever reason. I don't know I think you have to believe it has value. If obviously you don't believe something has value, then I don't recommend going over it with somebody. Again, advise them as if you're sitting across the table from mom, grandma, sister, whoever, okay? And as long as you do that, you'll be golden. But the modified life is a very, very valuable benefit that we have because most of the time that people who qualify for the modified life are basically uninsurable on the individual side, or they're going to get rated. Okay. So what rated means is if just like if you were to apply with car insurance and you had 5 car accidents in the past 5 years, your car insurance premium is gonna go up, right? You're getting rated because you're high risk. Life insurance companies see the exact same thing. If you have certain health issues, and it's all actuaries, guys, which just means average life expectancy. So somebody who's had a heart attack in the last year, like there's a certain percentage of people who live a certain amount of time, and they take all that data and they create actuaries. So that's what makes somebody uninsurable. Okay. And obviously it's all the main stuff, like if you're sitting down with somebody and they tell you they have cancer, or they just got over cancer like 2 months ago, or heart attack, stroke, insulin diabetes, these things that can be high risk. And sometimes people live for the rest of their life for really, really long, and I understand that. But again, it's just actuaries, okay? So if somebody has certain health issues, like I think it's our job to at least let them know that they still can qualify for a group benefit, and it's that modified life, okay? So write this down about modified life. One is its whole life, okay? It is a whole life plan, which means that it's going to cover that person for the rest of their life. It is a guaranteed policy. It does build cash value. It's paid up in 20 years, which I think is a huge advantage. And something not to underestimate modified, think about, like, if you're sitting down with a parent whose child, through conversation, you find out they have a child that has certain health issues that would make them uninsurable. I mean, just like think outside the box. I mean, obviously we wish kids to be healthy, but not all the time. Like, you're going to run into employees that have kids that have certain health issues. Like, a modified life is so good. If you have a 15-year-old that has certain, just certain issues, you can enroll them into that modified life. It's completely paid up in 20 years. So at 35 years old, they have their life insurance taken care of for the rest of their life. That's a great policy. So keep that in your back pocket, okay? And or, you're sitting down with somebody who just got diagnosed with cancer, et cetera, okay? But it's paid up in 20 years, okay? The first 3 years of the policy, any money that is paid into it through payroll deduction plus 10% will pay back to the beneficiary if that employee or whoever the insured passes away. Starting the 4th year, it pays the full amount. That's why it's called a modified life. Okay. But then another big thing is if they pass away in an accidental death, it pays the full amount from day 1. So even if they have the policy a year and a half, and God forbid they passed away in a car accident, then it pays the full amount. Okay. But what's nice about that is every dollar they pay into it plus 10% goes back to their beneficiary. It's a guarantee. It's not based on the stock market. Like if you were to put that money in the bank, like let's say, well, my child or my spouse has certain health issues, I'm just going to start putting money in the bank because I know I need to have enough money there for funeral and final expenses. We know banks are not giving 10% interest, right? They're not even giving 5%. If you did put it in a CD or whatever, then it's locked in there, right? Or certain investments, not a guarantee. Right now, investments are kind of down, to be honest. So that would not be a wise, you can put it in this policy and have peace of mind that guaranteed every dollar that comes out payroll deduction plus that 10% will pay back to that beneficiary. But then starting that 3rd year, it pays that full amount.
So for ALS, there's like you can only write them up to a certain age, right?
Up to the age of 80.
Up to age 80.
Yes.
And then after 70 onwards, it's not like it's prorated to be paid up by age 90, right?
No.
Yes. It's always paid up at age.
Well, if they enroll at 70. So, okay. So then if they enroll at 75, it's still paid up at 90. Okay. Well, I didn't even know that. So that might be the case.
I am compiling them.
Okay. Yeah, so,
It's not very often.
right, but if you enroll them over 70, all I know is that cap is 5,000. Is all I know.
Is ALX the same thing as modified?
Yes.
Yes.
Okay.
Yes.
And
One
nobody
thing-
knows what ALX stands for.
Oh, sure.
It sounds
Nobody
like-
knows. I will tell you whatever you guys, yeah, when I enroll, I don't say modified life.
Right.
I don't say ALX either.
Right.
I just say, actually, you qualify for this whole life policy.
Like it's the normal thing.
Like it's
for
absolutely
everybody.
normal. We're not gonna make them feel weird about it
You don't wanna make them feel bad.
because they already know. Like if you have somebody that's wheeling around an oxygen tank, they already know. I've literally given life insurance, ALX to somebody who walked in. And they were like, well, I don't even know why I'm here. You're not gonna give me any life insurance. So I said, I can insure you. What?
Yeah.
No, you can write
It has
ALX.
happened more than just a few times where somebody's like, I don't know why I'm sitting down. I'm not even gonna qualify for any of this. And it
That's
turns
the
out
best thing, because then you can
Yeah,
help them
they
and they
do.
will 100%.
they're just assuming that they're uninsurable because people have told them that before.
Right.
Okay. So, yes, just to emphasize what Diana said, don't call it a modified, never say ALX.
They don't know what that means.
Let them know it's a whole life policy because that's what it is and it builds cash value. And yes, you do pay a little bit more upfront because it's paid up in 20 years. People are okay with that if you tell them why. Right? So that's again how you build value in that, okay? But just don't underestimate that policy because I will say every single week I enroll people in ALXs and it helps them, right?
Yeah.
Whether it's them, child, all those kind of things, okay? So on the e-app, on the application, if you are gonna enroll somebody, if you go to add application, it's the A250 app. Okay, that's where you write a modified life. Now, it is a much more complicated application. We're not gonna go over that right now, but it's basically exactly what you write, when you're doing an individual policy. It's the same application, which is why it's a little bit more complicated, but, there's ways to speed it up, which your team will teach you how to do that, okay? So those are the three things: group term to 100, career life, ALX, okay. One thing I will say about building value with the ALX, and I'm just gonna kind of introduce how I pitch it, okay? You have to feel comfortable saying this, like bringing up people's health issues. Okay, it's okay, they already know. Okay, and I know it's uncomfortable when you first do it, but if somebody sits there and they're like, oh, I'm insurable, I've been recently diagnosed with cancer, be like, this is a group policy. Like, I've got good news. Like, and I totally understand when you've been diagnosed with cancer, obviously most insurance companies on the individual side would see it's okay. Like, you want to let them know on the individual side, yes, those kind of issues would make you more uninsurable. But what's nice about this group plan is you're still eligible. And there's no male or female rates. There's no smoker, non-smoker rates. And what's great is it does not, like, even though you're currently going through cancer, and I'm so sorry for that, you still qualify for this benefit. Now, I will say it's a group benefit. The good news is it's paid up in 20 years. So you want to start with that. The good news is it's paid up in 20 years. So you do pay a little bit more, okay? But it's paid up versus most whole life policies you would pay and pay and pay for the rest of your life. I see value in that, okay? And then what's also nice is, let's just say, hey, I do want to put some money away for my funeral and final expenses for my family. Well, you might as well put it into this policy because any money that you pay into it will pay back to your beneficiary in the first 3 years with a 10% interest guaranteed. Banks aren't even giving you that nowadays. And it's a guarantee versus doing it in the stock market or investing it where you don't know in a short term, 3 to 5 years, if that interest, you're even going to get that. So it gives me peace of mind knowing that it's a guarantee, especially if you're going through certain health issues, that if something happened to me, all of my money that I've paid into it plus 10% will go back to my beneficiary. Starting the 4th year, it pays the full amount. And like I said, it's paid up in 20 years. The other nice thing is that, God forbid, you pass away in any type of accidental death, that pays the full amount from day one. Okay. Now, what I would recommend and what most people do is set it up enough, at least for funeral and final expenses, because that's the first thing families will have to deal with if, God forbid, something were to happen to you. And then you go back to what I talked about first. Have you ever dealt with a funeral before? If you don't mind me asking, who was it and how much did that cost? Do you know what the average cost of a funeral is nowadays? Okay, so I would recommend at least having that much, you know, but keep in mind, ALX, you want to keep it comfortable still. So I try to keep it just at, you know, because you can only enroll somebody from 18 to 70 up to 30,000. You can't do a $50,000 policy. You can only do up to 30,000. So keep it around, you know, 10, 12, 15,000. But what's nice about ALX is you can do 8,000, 9,000, 10,000, you know, whatever's comfortable for that person. Okay. Okay, so now I'm going to bring it all home with sense of urgency. So we created the why, right? Is this stuff helping you guys? Okay,
Yes.
getting stuff out of this. Okay. So you created the value. All right. The second thing is you've got to create that sense of urgency. And I recommend doing this at the close and or throughout as many opportunities as you possibly can throughout going over this stuff. Okay. So, how do you create sense of urgency with life insurance? Why would somebody want to do it now?
You're never younger than you are today.
Yep, age and
Health.
health. Okay, so you have to tell them that because you can't assume that they know that. Most people don't, especially those employees that come in like, I don't need any of this, you know, but if you start building value and painting that picture, and then now the need is there, you've got to create that sense of urgency. So what I mean is as many times as you possibly can throughout you're sitting down with them. So let's say I'm sitting down with a young 22-year-old and I'm just getting it like, so do you have any permanent life insurance? No, I have nothing. Okay, right before I go over even how this group term to 100 works, I'm going to say the good thing for you is you're so young, you're in one of the youngest age brackets, or you're in the, if you're 22, I'm going to say you're in the youngest age bracket. So your rate is like nothing. I'm going to say it there. Then at the end, I'm going to, before I close it, which I'll give you the like extreme, create that sense of urgency here in a second, but say it there. Or like the advantage, and it doesn't matter if they're 30 years old, 40 years old, like the good thing is you're still in a good age bracket. Like if you can input that throughout, okay? Even if you're going over the cancer plan, accident plan, critical illness, like the good thing is you're still in a good age bracket, right? Because obviously no one's ever younger than they are today, okay? So however you want to pitch it, you know, blah, 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 but right before you close, and it doesn't matter how you close, you want to write this down. This is going to help create that sense of urgency without putting pressure on them. Okay, we are not in the business of twisting people's arms or like making them do it now. Let them decide for themselves. Like we are not trying to teach that at all. Okay, and if anybody sees me enroll or anybody, you know, in our office, we do not put pressure on people. You don't have to, but it's about educating them so they can make the best decision for themselves, right? So, right before you close, you want to say, the key thing is, okay? The key thing is, or you can change that up however you want to say it, but the key thing is locking in your age because that's what they base the group rates off of. You've got to tell them that. So the key thing is locking in your age because that's what they base the group rates off of. And obviously you're never going to be younger than you are today. So if you can lock in your age, because that's what's going to save you the most amount of money. Now, I'm going to take the pressure off by saying, now I'm going to be back every year, or we're going to be back every year for open enrollment. You can always change it or add to it if you want. But like I said, that key thing is just locking in the age. And then if they are young or like if it makes sense to say, and the good thing for you, you're still in a really good age bracket. So if you can lock that in, it's definitely going to help you. And then boom, however you want to close it, you know, like for us, we say, you know, which option works best, but however you're closed. But if you can input that sense of urgency, even if you're sitting down with somebody and they're with you and they see value and like, yeah, I probably should increase my life insurance because I do need enough for funeral and final expenses, or I'm a young person of like, yeah, I get it. My mom would take care of my funeral arrangements, but I'll just do this next year because I want to play video games or whatever the case may be. If they're thinking that right at the end, if you remind them like, hey, lock in your age because that's what's going to save you the most amount of money. Oh, boom. You're already like helping them over the fence. Does that make sense? But you take the pressure off by saying that, but I will be back every year, so you can always change it, which is true. Okay, because I remember when I was new in this business, one thing I struggled with is I would come up with these family plans and I would be like, I got to take care of like all of their life insurance issues in this one sitting. So I'm going to take care of their funeral, their income, their mortgage, college education in this one sitting. But then you realize that like, that's a lot for somebody to commit to right then and there. Versus like, if you don't understand somebody's finances, but if they can just do enough for funeral and final expenses this year, then next year we can work on income replacement, or next year we can take care of inflation, or next year, you get the point, right? Or like, just take care of you this year and lock in your age. That's still going to save you money. And then I'll be back next year. If you want to add your spouse, we can always do that, but you're taking that. So then guess what? You're creating that sense of urgency for them to do something now. Does that make sense? And if you have those two things where you are creating the need, okay, because the higher the need, the less concerned they're going to be with the price. And then you create that sense of urgency after, you're going to get people to enroll at a very, very high percentage. Okay. So last time you're going to hear it from start to finish. So I know you guys were writing it down. So create that sense of urgency by saying the key thing is locking in your age, because obviously we're never younger than we are today. And that's what they base the group rates off of. So if you can lock in your age, that's what's going to save you the most amount of money. But I'll be back every year. You can always change it or add to it. Okay, so boom, however you want to close it. Okay. Any questions? No? Anything you guys want to add?
Maybe I missed it, but in the beginning, how do they determine which life insurance to offer as far as?
Well, I didn't really go into qualification. I gave them like really quick bullet points, but I figure we'll go over that. This is kind of just more of like creating the value. Yeah. Okay, that's all we're gonna do. So what we're gonna do is break in here, and if Kansas City, you guys want to do the same thing, let's role play. Okay, just having that conversation a little bit with the group life, role play the career life plus. Okay, and even if we have time to do the ALX, but let's create that value, go over the bullet points, and then end with that sense of urgency. Okay, so let's practice that, and then we'll get back to the rest of the day. Okay. All right. Did you stop the recording yet?